afternoon. How are you looking at this recovery in the market? Yesterday seems like one of those bad dreams.
Very good afternoon to all. So if you see from last couple of days, index was stuck in a range, and yesterday was one of kind of a shocker intraday basis. If you see the Nifty that recovered well from the start of the July series from 24,000 to 24,550. Yesterday it whitewashed the entire gains. Today again we have seen some recovery from the lower levels. So I'll say the index is likely to be in a range between 23,800 to 24,444 levels on the Nifty front, and stocks action is likely to continue. Having said that, Bank Nifty yesterday in Bank Nifty also we've seen a sharp fall. However, good recovery again we've seen from the lower levels. So in sense, in Bank Nifty is relatively strong with major support around 56,750. On the upside, 57,777, 58,000 the hurdle level. So sense is on the index perspective, range bound move within this range, broader range, it is likely to continue. But you have to focus on the sectors that are outperforming, such as pharma, NBFCs, wealth management, and we have to pick theme specific from that to play the momentum going forward in the July series.
Interesting. Just looking at some of the individual movers, and you can't get your eyes off from Kalyan Jewellers, Kunal, and the kind of recovery that it's made after that fall day before post its quarterly updates. I think it's more than made up for it. What do you do with this stock now at 445?
Yeah, it's been a breathtaking move for Kalyan Jewellers, because this has come out of nowhere, frankly, for the stock price, because looking at the volumes, the patterns, it was expected that the stock would probably try and remain, in a range sub the 400 mark. But today's move, particularly for Kalyan Jewellers, and yesterday's move also to a larger extent, when we look at this in the conjunction, I think indicates that there's been a huge amount of short covering. The volumes today on the spot for Kalyan Jewellers is almost at one of the highest volumes the stock has clocked over the last many months, and that tells you the kind of resurgence the buying interest has shaped up. And I'm assuming that the delivery volume for Kalyan Jewellers would also be on the much higher side today as compared to the past many months. Now, even after this 20% up move of sorts for the stock, at one end it will look like it's a bit of a stretch, but this also indicates that that major downtrend which the stock was going on, going through from levels of 800 a couple of years back towards 350 mark which the stock had tested. So that major downtrend is now behind, and we are looking at a big revival of sorts for Kalyan Jewellers. So now what matters over here is your time frame, your risk appetite, and the capacity to try and buy the stock if there are any kind of a marginal corrections in play.
Arpit, what's the sense with regard to an Eternal? It's one of those which continues to move upwards. Also the move on Swiggy, 7.5%. Interesting one.
If you see from last 1 week, we have seen good momentum across the new age companies, whether the likes of Swiggy, Eternal, Paytm, and likewise. And looking at the structure of Eternal, definitely it has formed a strong base formation on the monthly time frame. We have a range breakout of 270 levels, weekly scale, a consolidation breakout, slowly, steadily moving higher. So I think from a positional perspective, Eternal can definitely head towards 330, 350 levels, previous swing highs that was made way back 6 months back. So Eternal looks strong on the chart, 275 with the support zone. On the upside, 333 with the level to watch out for. Apart from that, if it's Swiggy has been a downtrending counter from last couple of months. Surprisingly, from last few weeks, we have seen a short-term bottom is in place. However, the bigger trend is still weak. So some bounce back move can be seen towards 300 levels. But given a choice between Swiggy and Eternal would be a preferred pick because the bigger structure on the monthly time frame is positive with overall buy and dips counter for Eternal.
And Kunal, Dixon, that's the other one, along with some of the consumer durable names, which are doing very well in trade today. What next with regard to some of those names?
Yeah, this looks interesting because what Dixon has done today is broken past above its 200 moving average after a gap of almost like 10, 12 months, 11 months to be precise, from the previous highs the stock had in the month of August, or the previous levels when the stock had fallen below the 200 moving average in August 2025. So I think from there, we are looking at a major turnaround of sorts for many of these names. The stock at that point of time when it had broken below its 200 DMA was almost at 15,800, 16,000 levels. Now, even after a break of its long-term moving average today, the stock is up towards 13,500 levels, which means we are still off by 2,500 points for Dixon Tech on a comparative basis. So that tells you that there could be a very strong possibility that in the next 6 months, 1 year, the stock can at least climb back towards that 25 or cover up this gap of 2,800 points.
Okay, well, just a few hours from now, an IT bellwether, TCS, is going to be reporting its numbers. While it's going in absolutely flat into its earnings, it has had a few good odd days as well, in the last fortnight or so. Let me take it across to Darshita and find out what exactly is the street penciling in, not so much from the quarter gone by, but what is it that one would look out for in the commentary from the management today.
The IT earnings season officially kicks off today, and all the eyes are on TCS, which will be the first major IT company to announce its Q1 FY27 results. Now, this quarter is expected to be relatively soft one. In the constant currency terms, revenue is likely to remain largely flat, reflecting a cautious demand environment and a seasonally weak quarter. However, because of the favorable currency movement, revenue in the rupee terms is still expected to grow nearly by 2% QOQ. But the bigger focus will be on the margins. Street estimates suggest that the EBIT margins could come in at around 23.9% compared to the last quarter. So if that happens, it would be the lowest first margin quarter for TCS since Q1 FY24 after almost 11 quarters. So now what's putting the pressure on the profitability? To answer that, the biggest factor is the annual wage hikes that came into effect this quarter. Alongside that, AI-led pricing pressure and continued investment in building AI capabilities are also expected to weigh on the margins. And that said, the numbers themselves may not be the biggest trigger. Investors will be listening closely to what the management is saying about the demand environment, especially in the key markets like North America, the deal pipeline, AI monetization, and most importantly, whether margins are expected to recover over the next few quarters. So overall, while the quarter may be muted from a financial performance perspective, TCS commentary could set the tone not just for the company but for the entire IT earnings season.
I don't think this quarter numbers should be read too much, because I believe that large part of the deflation of the AI related effort reduction will show up in this quarter, and probably after this you will see a big jump in numbers from next quarter onwards. So I am reading more like this, that this is the inflection point of the sector. This quarter will be the inflection point, and from here things will turn around. Having said so, I think different companies will report different number, right, as rightly mentioned. From minus 0.5% to 4.5%, with best numbers coming from Coforge probably, and probably weakest number coming in from TCS, Wipro, and like of that. So, but as I said, that this is the inflection quarter, and the commentary will be more important rather than anything else. And I believe that commentary will be more positive and forward-looking.
Kunal, if I were to quickly quiz you with regard to some of the IT stocks, we've seen a decent bounce from the lows for the day. How sustainable, and would you play it for a trade between maybe today and tomorrow? Any BT, ST, ST, on any of the IT names?
They are the days where we generally avoid taking any kind of a trade as such, because then it's pure speculative. I think you're just looking at, because you can't have a stance on the build-up of open interest, etc., prior to the results, because post-results, and especially for a sector like IT and majors like TCS, etc., where markets are waiting on the edge or on the fringe to try and take a trade or not to take a trade. I think in that scenario, it's very difficult to try and preempt any kind of a move. But what I like about the IT sector at large is today's recovery. And then in the context of the last 4-5 days of the price action, it's not as if that the IT stocks had not seen any kind of a major sell-off earlier. In the last, I think, many weeks, there have been multiple instances where you've seen the IT stocks falling by 3%, 4% on a single day or for consecutive days. But the fact that we've seen a good recovery, a bullish hammer formation on the IT index chart, and that too for many constituents like persistent, etc., I think indicates that we are looking at a point where the behavior change has started to happen for the IT index. I would probably take this on the slight bullish side, but as I said, I'll just wait for those results to start coming out, and once the market action is on the positive side for these names, that's where there could be a high confidence trend breakout for these IT stocks.
If you were to pick a couple of stocks from the IT pack, Kunal, outside of TCS for a trade, you would wait and watch for the TCS numbers, or are there any favorites looking good for now, not from an earnings standpoint? If we were to kind of take both events in isolation, how would you play?
So if I take it in isolation, then I would look at HCL Tech. I think that's a definite chart which I think looks extremely attractive. Persistent is something which has popping up on the charts multiple times in terms of a potential turnaround or at least a recovery of the huge underperformance the stock had shown into. There could be a high beta trade over here for names like KPI type, because the stock which has been beaten down significantly. The RSIs on the monthly charts is now almost at 12, 13 for the stock. Tata Tech is something which you've been bullish on, and especially with the kind of recovery the stock has shown. So there are those odd few names which are looking far better on the charts, possible that they could probably emerge as the leaders with respect to a relative price action. But as I said, just wait for the results to pan out.
Okay, that's that on IT. And where is it that, there could be value, and where is it that you need to keep a close eye on? Arpit wanted to address Dr. Reddy's and this 7.5% fall. Of course, it's news-driven a move, but would you be tempted to buy the stock after this fall today?
So generally, if we see the pharma sector is in all uptrend, and today, if we see the price action, just today's action, the stock is corrected from 1400 levels in the last couple of days. But if I see the bigger trend on the monthly time from the weekly, multiple supports are intact near 1200, 1220 levels. So I think today it's better to avoid. But once the stock comes near around 1200, 1220 levels, that would be a good entry point, because from last almost 1 year, the stock is trading in a range 1200 to 1420 levels. So 1220 would be a good entry point with major support around 1100. The stock can slowly again head towards 1350, 1400 as the pharma sector overall is in uptrend.
In fact, since we're talking about DRL, they flagged a delay in their semaglutide supplies because of the API quality issue. In fact, the company clarified that there is no impact on patient safety and existing regulatory approvals remain ineffective, while, of course, corrective measures are underway to try and restore supplies. Let me take it across to Meryl and get in more details, given that the stock is falling so much because of this.
That's right. Dr. Reddy's has flagged an API quality issue pertaining to their semaglutide API, which is now causing commercial supplies of semaglutide to be delayed for the company. Now, the company has standing approvals in Canada as well as India for this drug, and we're expecting, especially analysts are saying, that Dr. Reddy's may lose the early mover advantage that it had achieved in Canada market. Furthermore, we may also see this impact the company's standing agreements with Sandoz as well as Aspen in the Canadian markets, and the timeline for Canada's semaglutide ramp-up is also seen to be pushed. We're expecting, therefore, a meaningful impact from this coming to the company's Canadian business as compared to India business, where the semaglutide offtake has been a little bit underwhelming. But speaking about impact, it ultimately depends on how long the company takes to address these issues and fix them. However, analysts have noted that the wordings of the exchange filing point towards a more shorter-term disruption. However, analysts still see an approximately 1 to 2% EPS impact from this on the company's total FY27 EPS. So this marks quite an important issue for investors to track when it comes to Dr. Reddy's, and we will be awaiting more information on this during the company's 4:30 p.m. con call today.
Yes, so that'll be awaited, but a percent or two on EPS, 6% lower. I mean, just goes on to show, Aisha, that the knock-on sentiment as a result of news like this tends to have a disproportionate knock, essentially, even versus what the knock-on earnings could well be, essentially. But let me go across to Avi. He's here with some of the stocks that you want to keep on your radar at the current hour.
So some of the stocks trending in news are starting off from Tina Rubber, which is up by around 6% on account of setting up a Chile unit with around Chilean peso 500 million authorized capital that is done to expand their global footprint for end-of-life cycle tires, which they will source from around the world and use it for recycling. Up next is NLC, which is also up by around 2 to 3% on account of news that they have signed a JV with Nalco, and they will be setting up a 270 megawatt, 4 plants of 270 megawatts in Odisha, which will be for thermal-based captive power plant. This JV to execute has a 25-year power purchase agreement with Nalco for 100% offtake of power. Up next is Phoenix Mills, which has come out with a business update for Q1 and it is very strong and is up by 30% at around 4,700 crores, which is their retail portfolio consumption. Their commercial offices portfolio, the occupancy for which has also increased by 200 bips and now stands at around 72%. Our last stock would be SML Mahindra, which is up by around 3% on account of its business update. The CV production has risen by around 5% on a yearly basis. Production has risen by 3% and the sales have risen by 5%, while the exports have fallen by around half of it and now stands at around 34 units. So these are the stocks that are trending in news, which are SML Mahindra, Phoenix Mills, NLC and Tina Rubber.
Okay, thank you so much for that, Avi. What we'll do is slip into a very short break, come back, talk about some of those names along with other stocks. Plenty of buzzers. Address some of those on the other side. Stay with us.
Back with closing trades right here on ET Now, and you're watching us live from Nasu's launch studios. In the meantime, just taking stock of where the market is, holding out quite okay. The breadth of the market even better. And that's where you're seeing big movers like a Kalyan Jewellers, a Kane, Swiggy, Navama, Premier Energies. Can go on with the list of movers today. Some profit taking coming in some of the defense names. Look at a Mazgaon today, for instance, or for that matter, BDL. BEL as well is a little bit tempered. But other than that, it's a very, very strong market that you have at your hand. Look at some of the realty plays. While yes, Oberoi, I think, is a loser today. But look at a Lodha, for instance. That stock is holding up 5.5%, no less. So quite a meaningful move coming in on that stock as we speak right now. Kunal, you've been tracking, realty as a story from the March lows. Any fresh buys that you would recommend?
Yeah, quite a few. In fact, Phoenix Limited is something which is looking attractive. That's a differentiated chart. Something which I think has done very well for itself. And I think at 2,000, 2,100, the last I had seen for the stock, I think looks quite strong. Very sturdy at the current levels. There's Prestige, which has done very well. Godrej Properties has come back about 2,000 mark. And these are very fresh breakouts for the stock prices when I look at it on the weekly, monthly time frame. And I think for traders who have a slightly elongated time frame, I would still believe that this is a very opportune time to try and look at real estate names at the current juncture. Names like DLF, for example, has recovered massively when you look at it on a YTD basis. I was actually looking at the YTD charts for many of these names, and they formed classical bullish hammers, for themselves so far. Of course, it's too early to call it on a YTD basis, but when we've seen such kind of a scenario in the last 5, 10, 15 years for many of these real estate names, it's actually trickled into a much more longer and a stronger bullish uptrend for these stocks going for the next at least 4 to 5 quarters. So that's why I would believe that this is not a very small cycle for the real estate names or this price up move. This could result into a multi-quarter up move for many of these real estate names.
Very strong growth, 32% clocked by Phoenix Mills this time around. Let me, in fact, also welcome on board Sunil Subramaniam, market expert, joining us at this hour. Sunil, we were just speaking about realty as a pack. Any preferences within that pack? Would you play the theme, given the kind of run-up that we've seen even now?
Absolutely. I think that if you look at it over a long period of time, it's been one of the most underperformers, the realty sector. And today, the rise that's happened recently is, I think, a combination of 2-3 factors. One is the continued premiumization that we are observing. Second is the data center related boom, because data center first start off with getting big parcels of good properties there. And the third aspect is, of course, I think the financing side has got a lot easier with REITs now gaining popularity and getting equity taxation status. So there's definitely a wind of getting very low, cheap financing for them. And I think overall, the situation in terms of the fact that I know yesterday we saw a spike with Mr. Trump's induced volatility in the Brent crude. But otherwise, if you see, the monsoon has been progressing well. The El Nino is turning out to be a little bit like the wolf, which ultimately never came. It's not yet seen its effect. The IMD hasn't revised their long-term forecast of 90% long period average. But if you see, the monsoon progress has been pretty good. So on the interest rate front, I think any fears of an RBI rate hike are today on the back foot. So to that extent, I think the combination of a softer RBI policy, the data center related boom and the premiumization are adding to the positivity for the sector. I wouldn't be able to talk about individual stocks.
I understand. Arpit, PSU banks, that's the other one which is doing fairly well in trade today. Anything changing there structurally? Because it's been one of the underperformers for the last few weeks.
If we see the overall banking space, PSU banks definitely has underperformed. And looking at the setup wise also, so far there has been no major reversal on the weekly time frame. So daily there is some bounce back move. But if I look at the setup of the heavyweight SBI, so we'd still like to go with the heavyweight SBI as the overall the stock, the monthly setup is strong. The stock is consolidating the weekly time frame. Some cool off is seen. So level wise, 1000 would be important supports on the upside. 1060, 1070 would be level to watch out for. Apart from that, rest of the banks such as Can Bank, BOB still looks weak. So it's better to avoid and stick to the quality names or the momentum ideas within the banking space such as mid-cap banks, private banks, and the NBFCs.
Okay, Arpit, we'll let you go on that note. Thank you so much for joining us and giving us those views this afternoon.